Hello, and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. This week we saw the market up 4.8%, which brings us year to date down only 1.9%, down from the highs in February, down 5.8%, and then up from the lows in March, 42.7%. So with this huge rally this week, especially on Friday, which we'll get into in a few minutes, one thing that is obviously taken over the news media and everything are these protests, and it's again one of those areas where it seems like we're almost disconnected between the market, what's going on, and then all this really, really serious negative media surrounding the protests, some rioting. And so, Rich, why is the market not reacting towards these protests?
Well, if you look at the protests, first, most of them are very peaceful. So, in order for the market to react negatively, there would have to be a large amount of violent protests that were harmful to the economy. And second, where we have had violence and looting, the destruction has been very localized and has been more a main street store, very local, very small damage versus something that would hurt the national economy broadly. And as a result, the stock market has mostly ignored the violence and looting that have been related to some of the protests.
Yeah, thank you. That definitely adds some clarity as to why the market can go up 5% during a week where there has been so much emphasis on some of the more negative sides of what's going on with the protests. So thank you. Now get into, I guess, the big kind of win and surprise for the week is how were we so wrong? How were economists so wrong? We expected the jobs claims to come in for May. We were expecting to lose, close to 2 million, even more jobs, and ended up actually adding 2.5 million new jobs to the economy. So, Rich, how does that happen?
Well, first, some of it is that there are lagging reports. The number of jobs added is calculated very differently than the number of jobs, number of people applying for unemployment. So the two can get out of lockstep. The really good news about all of this is that because so many people have been brought back on furloughs that were not expected in the month of May, that bodes extremely well for the economy, and it plays in very well with the many states that have been opening up their economies and allowing people to get back to work. That has been going on for most of the month of May, and we are seeing a direct result in hiring, which caught everybody by surprise.
Yeah, ultimately, I think one of the things that a lot of market analysts have been saying is where's the economic data to support these new valuations in the market? We keep seeing the stock market rising, rising, rising. Where's the positive economic data? We're looking for it. We finally had it. And so this actually is giving some credence to the market being at this level where it is. And so we've been looking for this positive economic data, and here it is, hiring more, adding 2.5 million jobs, and that's net jobs, so that includes the amount of jobs that were let go in May, added to those were already made up for, and then an additional 2.5. So really, really positive news, caught off, every economist off guard, and really across the board it's positive. People are saying, well, maybe why is the participation rate went down? But we didn't even see that. The participation rate actually went up, which means that more people are engaged in the workforce, more people are looking for jobs than they were back in April. So overall, we are seeing the economy really starting to open up and adding back to it, which is, again, why we saw such a huge rise on Friday.
And that was in all of the indices. So it's really wonderful.
Yeah, and speaking of the indices, I think the Nasdaq closed within 3 points of its all-time high. So it's already up year to date, and now it's closed within 3 points of its all-time high. And Rich, why is that important?
Well, it's important on two fronts. One is that we've adjusted all of the portfolios, if you remember, to reflect more growth. And NASDAQ is very growth heavy because it's weighted towards the Apples, the Amazons, Microsofts of this world. And as a result of the changes we made near the bottom of the market, you've now been able to participate and do better with your portfolios. And it's always good when we institute a plan and it works out better than we expected.
Yeah, during the tax loss harvesting, we did implement, again, move to a blend fund. So like Rich said, more growth oriented, which favors those tech stocks. And since the NASDAQ has recovered more than the S&P and the Dow, like Rich said, we're extremely happy with the performance of the portfolios. So the way that we'd like to end this, as always, is really focus it back on you. And I don't know if you guys can tell, but I got a haircut today, and it was one of the most simple but enjoyable things that I've had happen in months. And so our challenge for you, and feel free to email us, comment below, talk to us about it. But as the economy, as local marketplaces start opening up, what is one thing that you're looking forward to, and what is one thing that you are participating in and enjoying, and let us know about it. So thank you. Hope you have a great rest of your weekend, and you'll hear from us next week.